I want to ask you a question. Your bank serves many Americans across the country. What are you seeing right now in terms of financial health of your consumers? What's the bank records tell you about the financial health?
Well, thank you, Mr. President. It's good to see you recovering. So at Bank of America, you have 60 million consumers and 35 million core checking accounts for Americans. And so the couple key points. Number one, they're spending more money. Through the first 25 days of July 2022, they've spent 10% more than they spent in July of 2021, the first 25 days. And that's consistent with what we saw in the whole second quarter and earlier this year. The second key point, I'd say, Mr. President, is their balances are much higher than they were in the pandemic. And so if you look at people of sort of $100,000 income families in our client base, you'll see that their balances go from 3 to 5 to 7 times more than they were in the pandemic. And by the way, they have grown in the month of July versus June so far, which is good news. So they have some money in their accounts still to help them through as the economy resets and settles in. The third thing is on their borrowing. Our credit statistics are better than they ever been, much better than 19, which was a pretty good credit year for banks. So delinquencies are low. They haven't gone up in the month of July. There's lots of credit availability for our customers, and their ability to borrow in the home equity lines or their credit cards. Obviously, the most rate-sensitive parts of the economy, due to what the Fed is trying to achieve and slowing down the economy and getting on more sound footing, mortgages and car loans and things like that have slowed down, but that's an intended outcome. And so even in the accounts, you can also see that they're receiving paychecks because we can see that, recurring payments, so that's good. So the consumer's on good spending, has the balance is borrowing, and then the question is what they're spending on, and travel and experiences versus goods. They bought everything they could. They bought a lot of stuff when they were cooped up at home. They're now out traveling and experiencing the world due to the vaccines and the condition of the COVID pandemic. But unfortunately, as you noted earlier in your comments, they've had to spend more on gas. But the good news is, if you look at June versus July, the year-over-year growth has gone from a 40+% growth rate in spending on gas to 30%. So it's starting to come down as you've seen the price of oil stabilize. Then the last thing I'd add is just what's on their mind when we talk to them, the same things you read about in the paper. They're worried about inflation because prices go up. They're worried about rent increases because half the consumers in America don't have a mortgage, so they're renting or paying on a monthly basis. And they're worried about, frankly, a lot of our consumers are saving, putting money in the market when the market's down. The good news is it seems that we've stabilized on those matters and we'll go forward. So right now they're doing what we want them to do, which is being employed. Some of the stress is in the system. There's no discounting that. And we're trying to help all those customers through the stress. But that stress has been mitigated by the work that your administration, prior administrations did to help people through the pandemic, and also just the strong employment that you spoke about.
Well, Brian, thanks a lot. I really do appreciate and thanks for always being available for your input. I appreciate it a great deal. And now I have a question for the CEO of Marriott, who is very disappointed to hear they're investing in travel now. It's a great concern to Tony. Tony, the travel and hospitality industry is experiencing, it did experience tremendous hardship during the pandemic. But the recovery now is experiencing is a very different experience. Things look really up for your industry right now. And how would you describe the industry today? And how do you see the path of demand through the end of the year? I know nothing's guaranteed, but what's your sense?
Well, thank you, Mr. President, for the invitation today. I think what we've learned over the last couple of quarters is really the resilience of travel. And when we look at our forward booking data, we see real evidence of that resilience. And what's interesting, we think about our business through 3 demand segments: leisure, business travel, and group. The recovery has clearly been led by leisure. And in fact, last year, leisure demand got back to where we were pre-pandemic. But what's encouraging is we're seeing real recovery in the other 2 segments. Business transient's been a slower recovery, but as we see more and more folks returning to the office, we see continued improvement. And maybe the biggest surprise has been the pace at which group demand has come back. And correct. And we fully expected social group to recover quickly with all of the canceled weddings and bar mitzvahs and family reunions. But now we're seeing strong and consistent recovery in business group travel as well. So quite encouraging.